morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 546th video. These videos are geared to help you become a better analyst and trader of the futures markets. Actually, the techniques that we teach you here at the Emini Trading Academy work really well in stocks as well, but we gear our trades towards the futures markets. Traders, it is February 8th. We're filming this for trading on February 9th, 2010. That would be for trading on Tuesday. And we have a green Omni on the board because... Did you hear what I just said? We have a red Omni on the board because we are still way below OTAPMA, or the Omni Trading Academy's proprietary moving average in U.S. indices, making us a seller of rallies, or continuing to keep us on the seller of rally mode. That is the mode that we are in now. It's the mode that we've been in since we've broken down below OTAPMA. We sell the rallies, and we will continue to do that until this market finally gets bullish again. Traders, yesterday we had a swing day in the S&P and the NASDAQ and the transportation average. You name it, it was a swing day all over the place. I showed you in the video, I brought the swing day before you, I put it on a chart, and I said, look, you really shouldn't take this swing day because we are sellers of rallies, indicators are not pointing up, and that swing day will likely fail. Traders, it did fail, we didn't take it, and go analysis. Analysis told us to sidestep that one. Here's the interesting thing. If it had worked out and the market did go higher, there should have been follow-through on a swing day to tell you the bottom is in. There was no follow-through on the indices swing days. No follow-through at all in any of them. And in fact, if you look at technical indicators, they are pointing straight down in the transportation average, which is our leader. So the transportation average telling us we have more downside, the S&P telling us to sell rallies, the NASDAQ absolutely telling us to sell rallies, and the other world indices are doing the same. So we will maintain our posture of selling the rallies with a red Omni until further notice. I hope it changes soon. We trade what we see here, not what we hope for. Traders, I have a couple of charts I'd like to show you. I want to show you that there was no follow-through in the indices, and I want to show you that they still look bearish, and that's why we're going to sell the rallies on Tuesday's trading. And with no further ado, let's go look at some charts. Okay, traders, the first chart you were looking at is the Emini S&P daily bar chart. Each one of these green lines represents 1 day's trading. I showed you this in last night's video. This is what a swing day looks like, and I showed you a swing day basically is one of these jobs right here. You have a market that dropped. The next day it drops much further, turns around, rallies, and settles by the high. What you're supposed to do to handle that swing day is the day after the swing day, you wait for it to come down to about the low of the previous day, get long, and expect a rally out. And I said to you, we have right here, as you can see, 2 parts of a swing day, but I don't think this part's coming our way, and we will sidestep this today. Why would I say that? Indicators were bearish. We're way below the OTAPMA. We are sellers of rallies, officially sellers of rallies. So why would we find ourselves buying this? So we did not. As you can see, traders, it worked out. It did not rally up all day. In fact, it went down and settled by its lows. That tells you that you will continue to go lower or further on the downside. Now, traders, remember, in last night's video, I showed you this, and I said if we stay below OTAPMA, which we have been doing, big breaks will come our way. And if you pull a euro currency chart and you see what happened since we got below OTAPMA, it went boom, 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 down really, really big. We expect the S&P to continue heading towards the downside. I am not looking for a crash, but while we're below my average, I am looking to sell the rallies, and I will not take these buy-day setups unless all indicators are pointing up. Luckily, we sidestepped it. We didn't buy it. The market went down anyway, as we thought it would, and we are going to sell rallies on Tuesday. Let's look at a few more charts here. Okay, traders, this chart is the Dow Jones Transportation Average, deemed the leader of U.S. indices. This is the big kahuna, this one. As you can see clearly, traders, we got lower than the OTAPMA, the Omni's proprietary moving average. It failed right here. We've broken down miserably. The transportation average also had a swing day on Monday, which did not work. We did not expect it to work. Look at, we ended up down here and settling here. That is bearish looking. We are well below this major support line that you can see right here. It connects all the way back to November and then goes all the way back to the end of March of 09. This huge support line was broken. We are now in some sort of a parallel channel heading down, and we are going to continue to head down in that parallel channel. In my opinion, it should basically look a little bit like this. And I think that we'll just keep bouncing off of it as we make our way lower. Hopefully at some point we'll become buyers again, but not while we see this sort of action. So the transportation average has a bearish formation with bearish indicators. The S&P has a bearish formation with mostly bearish indicators. Let's look at a few more charts here. Okay, traders, NASDAQ daily bar chart. This also is deemed one of the leaders, secondary leader beneath the transportation average. When I say leader, I mean leader of the U.S. indices. This market clearly broken down below the Omni average, got lower than it, went up and tested it, failed twice, broke down miserably. Now we're down here with the swing day from Monday. The swing day did not work as we expected it not to, and it settled right here on Monday's trading. For Tuesday, we're looking for this thing to go lower and possibly get as low as the bottom of that trend channel. But as you can see, traders, we had beautiful channels going this way all the way up, right? But they're not doing that anymore. Now the channels are developing towards the downside. We're below the Omni average with bearish indicators in some sort of a bearish looking channel. Red Omni for Tuesday's trading. All right, traders, let's look at a couple of more charts here and then we'll wrap this chart segment up. Okay, traders, the only other thing I wanted to show you this evening were the shape of the indicators that wrap themselves around the U.S. indices. This is the RSI, and it is pointing towards the downside. The RSI stands for Relative Strength Index. It is a widely used indicator to let you know if you are trending in either direction, up or down. We also wanted to show you the slow stochastic, which is down in the oversold area. However, when a market starts to trend lower, this indicator pins itself and stays and whips back and forth down in the oversold area for quite some time. That is what we are expecting to happen. The indicator or the stochastic will just go up a little, down a little, up a little, down a little, but stay in this lower quadrant down here. That is what we expect to happen, and if that does happen, we will continue to drift lower in the S&P. Here's the quadrant we expect the stochastic to stay in. Traders, pull your own homework, pull your own charts, always do your own homework, pull your indicators, and take a look at that failed swing day on Monday in U.S. indices. You will see exactly what I'm talking about. So, traders, you've seen the charts. You see my technical reason why I have to sell these rallies. If you're uncertain, we are sellers of rallies because we are still way below the Omni Trading Academy's proprietary moving average. Very big average, and there was absolutely zero follow through on the swing day in the indices left there on Monday. So we expect that this market will break. It'll rally a little, we'll sell into the rallies, and it'll break down. That's the S&P we're talking about. Traders, if you'd like to join us, come on down to www.livewithoscar.com. Jump into the free chat rooms. Come check out my Omni recommendations and see where we will be doing some trading tomorrow on Tuesday. Make sure you come on down to the site, traders. I'm hoping to get a class done. Mike, you think we get a class done at some point tomorrow?
Absolutely.
I'm hoping to get a class done tomorrow for you Omniacs, a live class where I can show you some techniques and help us move forward this week in our analysis. All right, traders. Give me a call anytime, day or night, 702-629-4755. Always, always do your own homework. Never, ever trade without a stop because we know a stop is our best friend. And for you traders out there that get into positions without stops, it is suicide. It is going to cost you big if it doesn't blow out your account. And it's a very non-professional habit. A professional trader has a stop loss in because a professional trader knows even he might step away or might panic at the moment where you got to get out, or many things can happen. If your stop is in, it's in. The market goes the wrong way, it knocks you out. No more decisions need to be made. put your stop loss orders in, traders, and put them in first. All right, I'm getting out of here. Give me a call time day or night. Did I say that already? 702-629-4755 if I didn't. And I'm getting out of here, traders. Keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Subs are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.